Hi, I'm Ross from Kim Smith 150 Group Property Accountants. I'm just going to go through a little example today. I was looking for a couple of new builds and very hard to find new builds where they've got a price and they've got a rent on them. Try and give a quick comparison. But this was an interesting property. Yeah, just had some reasonable numbers. It's just good to look through what sort of things do I look through? What do the numbers look like? So we'll get into it and just go through this property. So obviously I'm not trying to sell it. I don't have any relationship to this property. It's not one of my properties I'm trying to market or anything like that. It's just the first sort of example I looked at. And I was actually looking for new builds, and this one isn't actually a new build, but we just thought we'd run through what the numbers look like. So it's a relatively new property in Hamilton. Yeah, it's obviously 4 bedroom, 4 bathroom. It's got 1 garage. It's got some living areas. So this is a standard sort of property that you'll see. It's advertised as fantastic 4 masters, but it's kind of 4 separate rooms or 4 double rooms that they try and get higher rent for. And often these are done by rent by room, but this is just a straight rent at $620 per week. It's on the market at $699. Yeah, so interesting things. So one of the first things I actually I looked at the RPNZ just to see what it looks like, how old it was. So yeah, it's around about June 2016. So it's actually 5 years old now, and quite interesting looking at this picture. There's obviously 5 of them. So there's 5 units and they've each got 4 double bedrooms. So that is 20, yeah, double bedrooms effectively in there. So that could be 20 or they actually could be 40 cars in there. And you sort of look in there and yeah, it's where on earth are all these cars going to park? They've got 1 car park from the advertising, but yeah, it's going to be very tight. This sort of corner site's actually going to make it quite awkward for car parking. And yeah, it'd be interesting how this works. And you look around it, there's lots of other multiple units. Car parking must be an absolute nightmare. So that would be one of the first things I would look at. Look at how many occupants do I have? How many car parks do I have? And maybe you can't always satisfy that perfectly. But yeah, there seems to be some issues with this one that you're potentially 1 car park, but you could have a lot of people in there. Next thing, we're looking at the rent. So we're looking at it, yeah, it's 699 and we are getting 620 a week rent. So yeah, I always just go through a spreadsheet with them. So this is 3/4. It's a place. Oh, that's not typing very well. 3 bar. Oh, I'm having a terrible day. We'll try again with that. 3/4. That's the place, and Hamilton East, it's 699,000. There's always some cost to buy. You'll be some legal costs. There's probably a valuation. You might do a building inspection. You might get some sort of cash contribution back. And I always work on 100% debt. So it doesn't matter if you've got a whole lot of cash to throw in there. Yeah, I still look at it, compare the same with the same, look at it. Does it actually give a return with the full debt? Yeah, it's 620 a week is what they're currently advertised, and they're on a fixed term, but I don't know whether you consistently get 52 weeks with this. Yeah, it's sort of more student accommodation. I probably would go 51 weeks, even though it's 5 years old. So you're looking at a 4.52% gross yield. So 31,000 divided by 699, 4.52%. It's actually pretty good in the market. Then you've got your different expenses. So some accounting. I don't think there's a body corporate, but there must be some shared expenses in there. It actually doesn't mention about that kind of it, but I would expect $1,000. You've got some shared driveway and other things, fences, some things are going to have to come up. Interest rates these days, 2.5%. Property management, I've got an 8%. Some rates on the property, some repairs. Yeah, it's got quite a few bedrooms. It's only 6 years old, but you're starting to get older and you're going to start to need some work. So maybe 10,000 over the next 10 years, $1,000 a year. Some education or seminars. Maybe you join Waikato Property Investors, maybe a little bit of travel, maybe you live in Hamilton. Oh, not $1,000, $100. So you're looking at 31,600 in, 29,000 out, making 2,000. Your chattels, it's still relatively new, so you should get reasonably good chattels depreciation, and it would be worth getting value it, and they would value the carpets, the curtains, dishwasher, stove, heat pump, fences, decks, driveways, paths, all the different items so we could depreciate them. So old rules, it would make a loss, we'd pay no tax. New rules, we're buying it now. It's obviously after the 27th of March 21, so we would lose our interest from the 1st of October. So the 17,000 interest is, yeah, we've got a $2,000 loss, add back the 17,000 interest, we actually have 15,000 profit. If we're a higher income earner, 33%, we're going to pay about 5,000 in tax. So we're making 2,000, but we're paying 5 in tax. We're losing $2,800. That's with interest rates at 2.5%. So straight away with this is all interest only numbers. I'm starting to think, why on earth would you buy this property? Unless there's some other great reason. It's subdividable, it's got a great development. You can massively increase the rent, and potentially maybe you could do rent by room to get a little bit. To me, yeah, there isn't subdivision, there is development. Why on earth would you look at this? And yeah, it's just really struggling with cash flow. I then look what will happen over the next 10 years. And property going up in value, complete and utter guess at the moment. Very hard to know what's going to happen with so low immigration, interest rates going up. Property generally goes in cycle, but yeah, in the past it's gone up 6.3%. So if we put the same, it would go up to about 1.2 million over the next 10 years. Like I said, complete and utter guess. None of us have a crystal ball. Rents slowly go up over time, expenses slowly go up over time, and interest rates maybe 2.5% to 5%. The same, I don't have a crystal ball. It's just trying to be realistic with it. The cash flow on 100% debt interest only is negative all the way along and gets quite a lot worse if interest rates go up. So a lot of people think, oh, rents are going to get higher, it's going to get better and better. Well, if interest goes up, it actually gets worse and worse. We then are not allowed our interest deduction. So what happens then is we've got a big profit, big tax bill. We're paying 63,000 of tax on this over the next 10 years. So over a whole 10-year period, we're hoping on a $500,000 capital gain or gambling on that. None of us know. We don't know it's going to happen. And it's looking like it's going to cost us $100,000 over 10 years or $10,000 loss per year. So to me, this is pretty hideous. And what I look at is the different comparisons. Old rules would have only been 3,000 loss, still not the best. If you already owned it, you get phased out over 4 years, 8,700 loss. So if we buy it new now, 10,000 loss a year on average over the next 10 years, or 100,000. So to me, yeah, terrible cash flow. Yeah, I wouldn't be looking at buying this as a rental. It's got no development opportunities. It's got nothing else you can do with it. It's got issues with other owners, perhaps not a body corporate, or a body corporate, either than most people don't really like. Yeah, it's slowly getting older. It's not a new build. You're not still claiming interest. It's going to be a 10-year bright line. Not that I have a problem with 10-year bright line, but yeah, there's just lots and lots of things stacking up against this. So yeah, just yeah, good to run through the numbers. Just something else to watch out for. We have got 3 webinars coming up over the next week and a bit. We've got property trading on Wednesday. We've got rental basics on Thursday, and yeah, we're doing a newish topic about paying your loan off quicker. Yeah, really turbocharging your KiwiSaver, some money management tips. Sounds really dull and boring, but it's actually all those important things. How do you just make that little bit more, save that a little bit more, end up with a better retirement? So yeah, have a look on our Facebook. Watch out for our newsletter or blog that's just gone out with those on there. Yeah, they're great free webinars, all great information, not a sales pitch. I don't have any buildings or properties or anything to sell you. So it's just good information. So yeah, make sure you like those. And if you need some help, go on our website and have a free chat. Thanks a lot. Bye.